Not a ton to report right now. So it's the 29th of July of 2025. And what we have as far as data that came out today is things that are really kind of moving everything is we've got the Case-Shiller home price index. Looks like it came down a little bit from what they anticipated to go up to, but it's still up, right? We're still showing home prices going up. Consumer confidence looks like that's a bit higher than what the anticipation was there, and job openings look like they have dropped a bit. So what's interesting about the job opening thing, we're going to be stepping into ADP information this week. We're going to get continuing claims. We're going to get initial claims. We're going to get non-farm payrolls, average work weeks, unemployment rate, construction spending. We're going to get the Fed rate decisions going to come in. We already know what that's going to be. Everybody's already talking about that. Personal income, personal spending. So it's a big week for news that will have some sort of influence. But what's really interesting about it, the unemployment is kind of dropping a little bit, partly due to the labor force dropping. We're not having the hiring gains. We're also immigration. We have net immigration, which is going negative, which is what we all voted for, right? That's what we wanted. So we're also going into a time of year that does have a drop in those jobs. So because of that, it could soften the market a little bit. That could be some improvement for bonds. So we could see those bonds see some continued improvement. As it improves right now, we did see, as a result of the information that came out today, we did see some improvement. So let's take a quick look here and so you can see what did occur. So we did take a little bit of a hit for the last couple, 2 or 3 days on mortgage-backed securities, but today, bam, jump right back up. So we're playing in a little tiny narrow channel here. Let's open this up. So you can see from here to here, we got this window here we're playing in. Dropped all the way to the bottom of this, bounced off of that floor. It's kind of, it's scraping this bottom, coming back up. Now it's above all the moving averages, but it's halting right here in this same spot. So we have something here. If we look backwards, a little bit of a ceiling. I don't know how strong that'll be, but depending upon what comes out these next couple of days with the job reports and that, we could see it climb back up. But remember, we have this big strong thing here. So we've got a little bit just in the middle. We're in the middle of this range that I'm guessing is our range right now. We're talking about 50 basis points. So it's a 0.5% in cost swing here that we're dealing with. Not extreme, not monster. If you're looking at a $200,000, it's about $1,000 in cost one way or the other. $1,000, depending upon what you're buying, is not going to have a lot of bearing on a 30-year fixed transaction, but it does, $1,000. It goes. You can buy a steak right now, really, really, really nice steak, and we need to take things in consideration when we're talking about the value of a dollar. We're talking about costs on a 30-year fixed asset. That's really what the mortgage is an asset on an asset that's going to appreciate. The symbiosis is going to pay off that you get to put the do a deduction on your taxes with. So when you wrap all those things up. Let's think about that for a second. You wrap all those things up. $1,000 is really something small in the long run. So something to keep in caution here is hoping for that improvement and maybe not getting it because we are at the top of this little channel. We keep hitting in the middle of the broader channel that I'm watching, that sideways range. So that's my thoughts for the moment. Let's kind of see where it all plays out. Let's look at it. I'll share with you again on the bigger range of things. We're literally right in the middle of the bigger range. When you consider from here to here, from the top of the range here, bottom of the range being down here. Actually, the bottom of the range is really here. So back up in here to right here, we're right in the middle of that. It can go either direction. I think that some people might want to stay safe where we're at because things tend to pull to the negative quite often. But there is and if you see every time we blip up, it's a quick blip and right back down. So if you're waiting for something, you might want if you're going to have something that closes in the next week or two, it may be worth pulling the trigger. If it's something that's months out, don't stress about it. Just sit there and worry about what's happening to the rates. Worry about what you're doing right now. One is looking at deals, and we've talked about deals. I've had multiple deals on here, and most of the deals are gone, but there's more coming. So if you want to see deals that you have monster equity and they're going to put returns of 30, 40+% into your hands every year, it doesn't always have to be cash flow, reach out to me. 602-291-3357. Just text me and say, Aaron, put me on that list. And I'll make sure you get on that. But you want to grab them because people are snapping them as they're coming up. Don't miss out on that opportunity. Talk to you soon.